Hey, and welcome to Tax Talk with the Tax Queen. My name is Heather Ryan. I am also known as the Tax Queen. Today, I want to talk about what's so special about LLCs or limited liability companies. So, LLC or limited liability company is something that is thrown around all the time. I hear small business owners, I hear people, whatever, colleagues, and people talking about, oh, you should be an LLC. Make sure you remember, register your LLC. But what is it? And why does everyone suggest this? And why does everyone, say start that and say, hey, you shouldn't have a business without being an LLC, right? Let's dive in. So LLCs themselves have legal and income tax or tax advantages and disadvantages. So I'm not a lawyer, so I'm not offering legal advice, but if you wanted to create the LLC, it does give you a little bit of separation from business and personal assets. And so that's the legal aspect of protecting it. There can be more, and I'm not a lawyer, so I'm not going to get into that. But that's really the idea, is you're starting to separate and no commingling. And if you've heard me talk about this before, make sure commingling means no commingling of funds or finances. So all business finances are separate from personal finances. So really important when you establish an LLC, whether single member, multi-member, it doesn't matter. Everything is kept separately. So the basics of a single member LLC for tax purposes is, people say, hey, I started my LLC. Can you help me file that tax return? And, how do I save on my taxes? And by default, a single member LLC does not help you on your tax return. So a default single member LLC is a sole proprietor, and it files a Schedule C, and it's part of your 1040. So it's not a separate filing. It's just all part of that 1040 that you're going to file either singly if you're not married, or with your spouse if you are married filing jointly. So you're going to have a Schedule C, no separate really tax filing, because if you were a regular sole proprietor without the LLC, you would still have that Schedule C. And if you're a multi-member, so now you have more than one partner or member of the LLC, that can be 2, it can be 3, 5, 10, whatever it is that you have, you do have a separate filing. So your taxes now become filing a Form 1065. So by default, you are a partnership, right? So multi-member LLC becomes partnership. Single member, you're still a sole proprietor and you file on a Schedule C. Multi-member LLC by default becomes a partnership. The partnership tax return is the 1065 that is due on March 15th of the tax year. That's the filing deadline. So remember that it is a month earlier than your personal return. And it's really important to know the differences there and why we talk about that. And there is a little bit of different as far as tax treatment but I'm not going to get into that too much. This was really just to tell you about LLC, what it is, and why, what's the differences, right? So why is everyone talking about it, and what's so special about it? So when we have that partnership return, we have what we call pass-through taxation. So that Form 1065, which is the partnership tax return filing, creates a K1. So it's a Form K1 for each partner involved in the business. And it passes through that income from the business. So anybody who's in the partner as a partner, active partner in the business, receives a K1. And that income is going to then be reported on their 1040. That's really important to understand. So you are still reporting that income. It's just using that Form K1 on your personal 1040, right? When that K1 is produced by filing the partnership tax return or the 1065. So be really aware, both instances, sole proprietor and a partnership, you always owe self-employment tax. So if you're an active partner in the business, meaning you are not a limited partner, and hopefully you understand, or your lawyer, whoever is helping you form the business lets you know if you're a limited partner. Most of the time, my small business owners are active partners in their partnership. They're going to be paying self-employment taxes. So be aware of that, which is why LLC, you're going to pay self-employment tax, right? So whether you're sole proprietor or a partner, you're still going to pay it. So there's no tax savings per se. just by being an LLC. And I really like to point that out. Where you start to see the tax savings is if you elect a S-Corp treatment. So if the LLC chooses to, even as a sole proprietor or single member or a multi-member, it doesn't matter. If you elect the S-Corp treatment, you use the Form 2553 to do that. And now you are filing your S-Corp tax return, which is Form 1120S. And this is very similar to the partnership tax return. It produces a K-1, so that Form K-1, which you are then going to use to report the income on your 1040. And any person who is part of that S-Corp is also going to receive a K-1. It's going to report the income based on the percentage of ownership. So you're going to put all that into the tax return on the S-Corp side, and it automatically is going to create that K-1. And it's really important to remember that you still might have state income tax. So partnerships, LLCs that are treated as partnerships generally pay their own the income passes through to the partners, and the tax is paid via the individual tax returns. So each partner pays their own tax share of the taxes. And the same thing usually with an S-Corp. So just be aware of that, and that's what we call like pass-through income. And so the partnership itself, the S-Corp, the LLC is not necessarily paying taxes like a regular C corporation would pay taxes. And that's really the difference. So that's why a lot of people come to me and say, hey, help me with my tax savings. I'm an LLC, and I have to step back and we have to have a discussion about what that means, and if it's just them and how we can save them on taxes. There are ways to save. I'm not going to get into that on this video, but the S-Corp, remember, is a tax election of the LLC, and that's where you really start to see the tax savings. But you really have to have a higher income, and I like to say higher income of net profit of $75,000 or more before you start to see the tax savings. If you have other questions about S-Corps, I do have separate videos on these things, or just get in touch. Thanks for watching, and I'll see you next time.